Welcome to the Business Finance Bulletin, episode 239. Welcome again to the latest Business Finance Bulletin with me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, institutional investors supporting small businesses in need of finance, the cost of late payment to small businesses, and the open banking revolution continues. From the start of the credit crunch in 2007-2008, I'm sure some of you will recall, many business owners found it difficult, if not impossible, to borrow money from high street banks. Well, then entered the alternative finance providers, the peer-to-peer lenders. They really have been the saviour of many a small business. Now that model is all based around matching up individuals who want a better return on their savings with business owners who want to borrow money. And that model has worked really well and has developed and matured, such to the point now where institutional investors are supporting these platforms via lending to small businesses. So two examples have popped up. First of all, Funding Circle. They've announced a tie-up with Waterfall Asset Management, who are putting in £1 billion to lend via Funding Circle to small businesses. That fund will last over 2 years, and during that time they estimate that it will support approximately 14,000 small businesses. The Funding Circle will do loans up to a 5-year period for amounts anything from £5,000 up to £500,000, subject to the strength of your business. Another example, Thin Cats, another peer-to-peer lender, has announced a £200 million fund being released by BAE Systems Pension. Again, that £200 million will be used to on-lend to small business owners. Thin Cats, they will lend anything from £100,000 up to a maximum of £15 million. So two good examples there of how the alternative finance space has really matured and developed. If you want to know more about those two providers, just go along to their websites, which is fundingcircle.com or thincats.com, and there you'll find out more information about their products and services. Don't forget, if you do want some help and support and general advice, more than happy to guide you through the process. Just drop us an email, info@businessloanservices.co.uk. What's the cost to small businesses of late payment? Well, that's a question posed by a BACS payment scheme, and they manage the direct debit scheme and the BACS direct credit service. Now, they've spoken to business owners about the cost of late payment, and in 2018 they estimate that the total cost stands at £6.7 billion, which works out about £9,000 per small business. Not a small sum. But more scary is the jump. When they did that survey in 2017, the cost then stood at £2.6 billion, and now at £6.7 billion, that's a huge additional burden that small business owners are carrying, strictly down to late payment. So what's the knock-on effect of this? Well, first of all, from this survey, many small business owners are saying that they are forced to pay suppliers late, which obviously is not good for a relationship with your supplier. Secondly, many small business owners saying that they are foregoing or delaying payment of their own salaries. And lastly, they're also being forced to enter into overdraft facilities or other costly forms of finance. So you can see all of this goes into calculating the cost of late payment. Well, what can you do? Well, really, this is all down to avoiding late payment by having a robust invoicing system and process in place. Really make sure that your clients understand how important prompt payment is to you as a small business owner. 2018 is going to be remembered as the year when the open banking revolution really got underway. Over the last couple of bulletins, I've been mentioning how various lenders are now starting to take advantage of the benefits of open banking. First of all, what is open banking? Well, it's really designed to help speed up the process of borrowing money. At the moment, if you go to a lender as a business, they'll ask for you to send copies of your last 3 months or 6 months bank statements. It means you have to download them, scan them, whatever it may be, and then just send them on to the lender. Well, under open banking, one of the advantages is that with your permission, the lender will be able to dip in and view your bank account direct. So you won't have to get all of those copies of bank statements. So it'll make it very much easier and quicker to access finance. Now, one such lender really grabbing the opportunities under open banking is Iwoca. They are a short and medium term loan provider. And they've just announced that they've done a further tie-up with Barclays Bank and HSBC. So they've agreed now to share data amongst each other, again speeding up the loan process. So Barclays and HSBC now join alongside Lloyds. Iwoca have announced that Santander and NatWest are also due to join shortly. So a good example there of our lender is really grabbing those opportunities available by open banking to make it easier for you to access business finance. That's it for another bulletin. As ever, I hope you enjoyed it, and if you did, please don't forget to give it a like and a share. So that's it. In the meantime, have a great, successful and profitable week. Bye bye now.